hold me to these numbers. I'm just trying to remember what Cameron and Caleb were having to deal with when they were trying to do these things. But I think it's $3,000. If it's not, it's something close to that. But they offered, like, you can trade with 5 contracts, or on the larger ones, you can trade with 15 contracts, and that's guaranteeing you're going to blow out. And then you have to pay a reset fee, and they don't have to pay you out anything because you failed. So you just keep paying the transaction fees, and that's how they make their money. Well, on the 15-second chart, we can see it runs into Wednesday's new day opening gap, Tuesday's new day opening gap, and then we have this fair value gap that is above equilibrium on the price run that's dropped since Wednesday's high. In here, we have price rally up, come back down. Look at the overlapping of this candle's high. And the next candle we open, we trade down. Where does it trade to? Consequent encroachment on Wednesday's new day opening gap. You see that? That's this level right here. It touches it right there. And then rallies, leaving what? A fair value gap. What kind? This is a buy side imbalance, sell side inefficiency. So if it's likely to keep going higher, because it's going to dig into this one and maybe reach into this level, we don't need to know it right away, but because we have this potential new day opening gap we can draw up into, there's range between trading on this fair value gap being repriced to, and how far can it overshoot this gap. We'll look at the overlapping of here, where this body and this body agree. The top of that one and the low of that one. That right there is a PD array. One of the 81 that supposedly I don't have. It can touch that perfectly. What's the open on that? 18,081 and a half. What's the low on that candle? 18,081 and a half. Perfect. Perfect. And then it rallies. What does it create? A small little volume imbalance inside of, and real close to what? What's between these two levels here? Buy side imbalance, sell side inefficiency. So we want to see it form support or an inability to trade to the midpoint of it, or if it does, it needs to repel it immediately. That looks like this. See, every time I do that, it jumps. There. So here's consequent encroachment of that buy side imbalance, sell side inefficiency. We trade down to some random quadrant level. See that? And then what does it do? It rallies. This is good. This is good because it leaves this volume imbalance open and it doesn't come back down to the midpoint and starts to rally. Then the market creates every little down close candle needs to support price because that means it's acting as a bullish order block until we get above here, and it does, and trades to the high of that new day opening gap on Tuesday, which you derived that information from Monday at 6 p.m. and the difference between Monday at 5 p.m. to closing price. The market trades back down into down close candles here, just outside of the Tuesday's new day opening gap low, hammering around back and forth inside here. If this falters and fails and goes below this candle's low, to me, stand aside until 9:30 opening. Don't try to Mickey Mouse and play games with it because it'll probably hurt you.